Man, oh man, what a day. Boy, what a week it's been. Boy, oh boy, another great day comes to an end. Hope you guys made some money out there, but it's time to get back to work tonight. It's Thursday evening already. We got non-farm Friday. We got one more day left this week, and man, oh man, we have a lot to talk about in a very important video tonight here on the newsletter. As always, I'm going to cover all my favorite trades for tomorrow. That way you have an easy roadmap to make some money on Friday. Before we jump in and go over all the details in tonight's video, make sure you subscribe to our channel, hit that notification, that way you don't miss tomorrow night's video upload. And as always, guys, if you enjoyed the video tonight, do me a favor, will you hit that like button, give me a shout out in the comments section below. Really appreciate you guys tuning in and supporting this YouTube video. But enough of the intro. Non-farm Friday, another big day. We got more big news tomorrow. We got some more great trades on the radar. Boy, you'll notice, right? We definitely, you can imagine there must be some big news tomorrow because we got ranges everywhere, right? Range on the S&P, range on the Nasdaq, range on oil. Now, if we've learned one thing this week, boy, we know that ranges can give us some really great trading opportunities right now. S&P and Nasdaq are both bullish into ranges right now. We definitely have some beautiful rotations and breakouts on our radar for tomorrow. You know me, I love the rotation plays on ranges. But we'll talk about tonight. We might see some bear traps, right? I would love to get some bear traps because, well, I'll save the good stuff for the video tonight. We'll talk about why I say that here in a moment. But would love to get some breakouts, love to get some bear traps. I definitely do have some reversals on my radar. And again, we'll talk about my rationale on that a bit later. So buy side trades, sell side trades, we're going to cover all those details on the S&P and the Nasdaq. Over on crude oil, I'll tell you, crude oil is stubbornly bearish right now. Oil is on a 60-minute, very bearish, but apparently nobody told the buyers here right now, because when you see the chart here tonight, you're going to see why. We have a very bullish signal right now for oil buyers. I could definitely see some breakouts going higher. Would love to get some bear traps off the low. And of course, again, we're still overall relatively bearish here on the oil. And so we'll definitely talk about some breaks down. We'll talk about sort of a bull trap off the high as well. So there is no shortage of great trades we're going to talk about tonight. That way you're ready to make some money on non-farm Friday. Now, speaking of non-farm Friday, don't forget tomorrow is the first Friday of the month, which means everyone is watching for the employment number at 8:30 Eastern time. The two most important things that you want to be aware of when it comes to non-farm Friday is, first, be careful overnight. Oftentimes the market slows down before the big news comes out because everyone's, waiting to see what the number will come out tomorrow. So remember, trading is like riding a bicycle. It's much easier when it's moving, right? So if it's not moving too well overnight, just, be aware. Everyone's waiting for that number. Also, too, remember, if there's another thing I've taught you over the last few weeks during earnings season, I don't care at all what that number comes out as. And so my game plan tomorrow is I will not spend a moment of my time and energy. I don't care what that number comes out as. Right? It doesn't matter. All that matters is the chart and the reaction. So we've talked a lot about this during earnings season the last 2 weeks. Hope you guys have seen plenty of examples by now. Trade the chart. Don't overthink this stuff. The chart is the only truth that we get out there. And then the next thing is, whenever we have non-farm Friday, and this really goes for any Friday for that matter, my goal is to get into positions as early in the day as I can. Remember, Fridays love to flutter, right? They get low volume in the afternoon. If you've been watching my videos, if you trade in the last few Fridays, what have we seen the last couple of Fridays? Those Friday afternoons, they keep going and going and going. So my mindset on a Friday morning is, with non-farm Friday, is let that news whip around, usually by about 9:45. 9:45 to 11:15 is kind of when I'm thinking, okay, let's find something good to get into and then try to leave a piece of that position to run, because again, Friday, late afternoon, low volume, those big moves happen a lot on a Friday afternoon. So those are kind of the key components I'm thinking about for tomorrow. We do have that ISM ISM Services Index, right? That's definitely something I'm watching for tomorrow. We oftentimes see some really explosive moves around 10 o'clock Eastern time. So again, don't force it early in the session. Let the whippiness subside around the employment number. Be aware of that 9:45 to 11, and we'll see if we can get lucky again on tomorrow afternoon, because boy, the last few Fridays have just been so amazing. So definitely be aware of that. We do have the finish. We pretty much have survived earnings season. I gotta say, I wish we had another big week of news for earnings next week, because it's been one hell of a week. It's been one hell of 2 weeks, right? So we are pretty much winding down earnings season. We'll definitely have some corporate earnings coming out next week, but we pretty much now have passed the peak of earnings season. So we'll talk a little bit about next week, but for the most part right now, we're pretty much past that. There's not a lot coming out here for tomorrow. So remember, trade the chart in front of you. Trade the chart in front of you. Find a good setup, right, and try to leave that runner on Friday. All right, back to our charts here, because again, like I mentioned earlier, the money is made on the charts. The news is noise. The charts are where the truth is. Now, I'm going to go over all my favorite trades on the S&P, the Nasdaq, and the crude tonight. If you like making money, if you like growing your account quickly, make sure you watch all the way to the end, because every trade I talk about will apply to all three of these markets, right? So things I talk about on the NASDAQ will apply to the S&P. What I talk about in the S&P will apply to the oil, right? So it'll all mix, it'll all match up together. I like to build it all. So definitely, if you're serious about your trading, make sure you watch all the way to the end. Let's go S&P first, then some NASDAQ, and then of course we'll wrap things up here on the crude oil futures. Now, a couple things here. First of all, I'm back to an 8,000 tick chart here on the S&P. It's all based on daily volume, guys. All the time frames are in the upper left-hand corner, right? These are all tick charts. This is the 21 EMA, right? The exponential moving average, right? A lot of folks ask about that. And as always, I'm going to put some additional slower time frame charts, right? Things for the bigger targets, bigger objectives, bigger context down the description of the YouTube video. All right. So we'll talk about, bigger objectives, and those will be good companions to give you some bigger levels. And you can see kind of what my vision is for the bigger picture on all three of these, right? So I would definitely recommend grab those charts, the description, and that'll be a good companion with today's chart right in front of you. All right. Now that you know that, what's the most important factor on the S&P? Well, really the S&P and the NASDAQ were overall very bullish, right? A 60-minute time frame is very bullish. And we have basically, we've had a very big move the last 2 days, right? 2.5 days without any real meaningful pullback. And so we get a range right here. And of course, ranges act like magnets. And so whenever I see a bull market into a trading range, I always go looking for, support levels, right? Go a little bit lower, support levels below the trading range. And so when you think about kind of how this all lines up, overall bullish, but no real meaningful pullback. So you know that buyers are probably kind of starving for some lower prices right now, which kind of leads me into what my favorite trade for tomorrow would be. My favorite trade for tomorrow is bear traps, right? I'd love to get that deep pullback, rope in some of these bears, and then use that range as a magnet, and then whoop right back up into that trading range. So we'll talk about 4 different ways in which we can trap in those bears, use some stops as fuel. We'll definitely cover those. And I also want to talk about, because come on, it's a bull market. We've definitely got potential for a rip going higher, right? We call this rotation, right? Markets love to rotate off the low of that range. So we'll definitely talk a bit later in the video on how to trade that breakout going higher, because we haven't seen a very meaningful pullback. I've got to be careful as if we do end up rotating higher as well. All right, so let's talk about this. So the key is as we go lower, right? If we go lower, right? And again, it could be here, it could be here, it could be here, right? It really could be, really the best possible spot is down here around that 41.10 area, because that's that prior Big. I mean, you got to think a lot of buyers would love to buy that 41, 10 area on the S&P. It's basically the same thing on the Nasdaq as well. So stops as fuel, right? That's the key here. So as we go lower, what you want to think about here is how can I get some bears to chase this thing, not knowing it's an overall bull market, and use their stops as fuel. And so a couple of variations of this, right? First of all, failure patterns. Okay, we talk a lot about failure patterns in our free trading course, right? I want to use those seller stops. So once we get the pullback, now think about the bears coming in and trying to short this thing. Remember, range above us is a magnet. Overall bull bias, no meaningful pullback. Hopefully we can get a strong enough pullback to fool some of the inexperienced traders into thinking this thing is reversing. Once we get them trapped in, we can then use their stops as fuel, right? And buy into those stop losses. Now, one of my favorite trades on this will be this one, of course, is a 2-try failure. And then oftentimes when these things reverse, what happens a lot of times is you'll get a little tiny trap entry, right? They'll go down, they'll fail, they'll pop up, and you'll get that little tiny trap right there. So as it pops up, think about how you can find what we call trap entries. And of course, you guys are learning all about this stuff in that, right? In our free trading course, right? So deep pullback. Let's see if we can confuse some of these bears into thinking it's a reversal, use their stops as fuel to punch it higher, and then as we're going higher, keep your eyes on those little prior swing lows and grab what would be a trap low or a bear trap entry. Watch that trend line overhead for a good target. Leave that runner backed up to retest the high. And again, on a Friday afternoon, like I said before, things oftentimes get pretty fluttery, right? So failure into trap entry. These are the same entry patterns I teach in the free trading course. Which reminds me real quickly, I know that most of you guys and gals have taken the free class or you're taking it right now. You're learning failures, you're learning traps, you're learning all about ranges. But listen, if you're here for the first time, if you haven't taken that free trading course and learned all the entry tactics and all the techniques I'm talking about, what I'll do is I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy that you'll learn in that free video series will show you a stupidly simple trick to know where the best winning trades will be each day, and I'll make it easy for you to start making money on your own with 4 different entry patterns. If you're tired of missing the best trades, if you're taking too many losses, grab that link, take that free class. It's perfect for someone trying to make the jump into full-time trading, and you'll learn all about failures, traps, ranges in that free trading course. And again, I'll put all the important links also to the description of the YouTube video. Okay, let's keep going though, because there's more options on this. Let's say we break down, real strong move down, but now what happens is the bears don't come back and try twice and punch up, right? No, they actually pull back and they retest that low. Remember, anytime we see a real strong move in one direction, we expect to get a retest. That's why we look for the bears to try a couple times before we look for that run going higher, right? Now, if they can retest that low, now it's mission accomplished, right? Professional sellers, the smarter money, right? They're selling high. So now as we retest this low now think about who's selling here. Rookies, small stops, right? Unable to protect themselves. FOMO traders, let them try once, let them try twice. You can be even more aggressive on that failure off the low, right? So again, we run lower, we may retest, and then look for the same exact situation. Now, what happens a lot is we'll get that strong run down, right? The bears will come over. Again, all that momentum, they may easily retest that low, and then we get the bears trapped in, right? The bears come in, they try once, they try twice. Now watch closely here. We know where stops are, right? We know where stops are. We're going to use stops as fuel in this setup. Once those stops get hit, a lot of times it'll punch and really rip higher. Now, this is where the fun begins, because we know where that range is, right? We know that's the magnet overall. Buyers have been waiting for this deep pullback for a couple days now, right? So now they go out. I'm going to draw a channel, okay? Watch how I do this. Off the highs and then down off the low, okay? Now, repeat after me. Look left, find prior swings and grab that first test. As we always say, first test is the best test. Now, I'm not going to go over all the specific entry techniques right here, right? This could be a trap, a failure. It could be a pullback combo, a strength move, right? You guys are learning this stuff in the free trading course. We know where the market wants to go, all right? So keep that in mind. These are kind of the dream come true, right? We trap in the bears and then grab that first test off that channel, right? Either to add to the position or re-enter the position as it goes back up to retest the high. One more variation, V bottom. Remember, we haven't seen much of a pullback the last couple days, right? Last few days have been pretty much straight up, little ranges. Been loving these ranges. We may get nothing more than a sharp move down and a V bottom, right? There might be so many buyers waiting down here, especially around that 41.10 area. A lot of times what happens is when they V bottom like this, they'll pop up and begin to grind and grind and grind. Once we see that V bottom and begin to grind, remember that grind is an easy giveaway. It basically tells us the opposite side of the market is walking away, right? It's walking away. When I get that grinder like that, now we draw that trend line off the high. See, I'm doing this off that big low, right? And then we go out, mark our swings. Again, I love traps, right? So swings are where traps live. Get underneath the 21 moving average. The bears come in, try to get short, ring their bell with their stops getting hit, failure pattern, right? And again, we know where the market wants to go at that point. It wants to take out, right, the range and take out back at that high, all right? So those are kind of the four different variations, right, of as we go lower. Now, the next big question, of course, is as we go lower, what would cause us to want to be a seller down here? Again, you've got to think about the context of the market, right? Again, go in the description, grab that 4-hour chart on the Emini and the Nasdaq, and you'll see, right? There's a lot of very attractive areas down here to be a buyer. However, if we find our way down at this low, right? And this does seem a bit unrealistic for tomorrow, but it's non-farm Friday, so we have to be ready for everything, right? If we make our way down at this low, right? We then pull back to that moving average and we really blast, right? We really rip and jump off that moving average. At that point, we'll have no choice but to call this reversal. And when that happens, we'll cover that low, we'll find that channel, and we'll short off the high. I'm going to go into a lot more detail of reversals like this. I'm going to talk more about this pattern as we go deeper into the video, right? Because we're getting a bit late here on the S&P, and I want to make sure we give some time over the Nasdaq. All right. So if they do come in, again, if we take these lows out, they hold that pullback and they've really got to jump off that moving average, right? Because again, the size of the move higher here, it's more likely we end up lower and then whoop, right back up into that trading range. Now, let's get prepared here now for as we go higher, right? Because remember, I can't predict tomorrow. Nobody can predict what's going to happen. We know how to play the game if we go lower now. How do we play the game if we go higher? This one's a little more tricky because, again, we have to assume if we go higher here, we have to assume unless this non-farm payroll number really gets this market ripping, right? You know what I mean? So we have to assume that there might not be as many buyers up here. And again, if you go into the description down there, you'll see why I say that, right? The Nasdaq is at major big objectives. The S&P is at major big objectives right now. So we know we haven't seen any meaningful pullbacks, right? Nasdaq, same idea, right? Same idea. Overall bullish, big move, no deep pullbacks lately. Would love to get that bear trap down there and right back up into that trading range. But what if we go higher? If we go higher, because we haven't seen any meaningful pullback, you want to be thinking about bears coming in and trying to find ways now to short this thing. Right? There's probably going to be bears up here looking for ways to push this thing down just so they can flip their positions and buy it right back up, right? If you had a couple $100 million of other people's money, you would do the same thing. You'd unload up here, take your profit down here, trap in the retail traders, and rip this thing right back higher. Manipulation is everywhere in these markets, so don't be naive, and you would do the exact same thing if you had all that money, right? Anyways, now, as we go higher, knowing that's the case, right? Knowing that as we go higher, we may have a difficult time recruiting more buyers, and we really have to use the sellers and their stop losses as fuel, right? Now remember, the most important thing right now is it's a bull market into a trading range. So the buyers right now, they want to rotate off this low, right? They want to take this thing off this low, and they want to punch this thing up into that, obviously back to that high, but more importantly up around 13,000, right? If you want to look at a big round number right there. So we know where the market wants to rotate going higher. The way you want to trade it, is with bear traps, right? So as we go higher, right? As we go higher, bear traps and breakouts. Bear traps and breakouts. My favorite song. Anyways, bear traps. As we go higher, bears coming in. We have to buy at least my goal will be to buy as low as possible, because what might happen is as we go higher, there could be more bears up there trying to eat our lunch, right? So we don't want to be buying as it goes higher because of the stuff I've talked about already. So if we do kind of V bottom off this low, bears once, bears twice, bear trap. And again, you'll learn a lot about bear traps, right, in that free trading course that I mentioned linked up in the right-hand corner, okay? You want bear traps as we're going. It may V bottom off that low, pop up, grind, find that new channel, right? Little V bottom, but again, bear traps, right? Below that low. Again, you got to be buying low because we assume there are going to be bears coming in here trying to eat your lunch up there. If I buy nice and low, I'm already in the profit by the time it gets to those highs again, so I can move my stop up, get rid of the risk, and if they do come over and run this thing lower, okay, it's a scratch trade. It's not a losing trade, right? So as we rotate, if we rotate, it's those bear traps for entries to avoid buying too high, ultimately, right? Buying into those bears. Now, what happens a lot, right? And if you're with us today in the trade room, we saw a great example of this, right? When you get a bull market, and of course, this is a 4,000 tick chart, right? This is on a faster time frame. This looks much more obvious. It's a range, right? So what happens is you go below the range, you're trapping the bears, and look what happens with these bull markets that rotate off the low. They oftentimes keep on going, okay? Now look what happened in this previous example. Draw off the high, draw off the low, right? There's that new channel, right? So this is what we're thinking about if it goes higher, okay? If it goes higher. So let's talk about this. And again, that's a little micro example. If you're within the trade room today, we saw that firsthand. So we know the bear traps off the low, okay? That's kind of the easy part. Now, as we go higher here, there's a couple different breakouts you want to look for. One would be we trap in the bears, right? And we blast up. We then pull back to the moving average and we jump. We blast off that moving average. Okay, remember, I'm not going to buy this one, but once I see those buyers come in and jump, right? Remember, we're already pretty bullish overall. So it may not take a lot of effort for this thing to really rip, right? But we have to wait for the price to pop through the highs, make sure it's convincingly through that pendulum swing. Okay, make sure it's convincingly through that pendulum swing, right? I want to make that very, very clear because I will talk about in a moment how to short off the top here in a moment. Remember, we're very high up right now. So as we go higher, you have to think smart money's up there with lots of cashola to sell this thing back down again. So if it really holds that pullback, right? Bear traps going to started. This becomes what we call a 1-2-3 move. A 1-2-3 pop, right? Convincingly to the high, convincingly to that pendulum swing. Now, with all that strength going higher, we now go out, we find that new channel, right? And we buy that first test off the low of that channel. All right? We call these 1-2-3 breakouts. Rotates off the low. This is very much a possibility for tomorrow. Now, one variation of this that you want to kind of think about, right? Now, instead of, again, we pull back, we trap in the bears, right? That can start it. We pop up. Okay, now we don't pull back and blast. 1, 2, 3 breakout. We pop and we grind, right? We grind. Now remember, grinders are usually a pretty darn good giveaway because a grinding market, those are not buyers buying up there, right? Those are sellers who undoubtedly have their stops, right? Or try to short the top. They're getting stopped out. Right? That's what causes markets to flutter like that, right? It's a little bit of FOMO too, right? A little bit of people buying high on FOMO, but the majority of that is the opposite side is getting knocked out. When that happens, draw that trend line off the high. Find that channel off that big low, and again, you know the drill, right? Find that first test. Now, generally speaking, whenever we see a range breakout, okay, the first leg and the third leg are going to be symmetrical. Okay, so if we do see this thing, if it pops up, right, then begins to grind, okay, that's going to be your first leg. Measure that leg, and then once you get that first pullback, that first test off that low, that creates now, right, that creates our third leg. Remember, trends love threes, first leg, third leg, the middle leg is oftentimes kind of the oddball, right? Especially on the pop and grinds. And again, I wouldn't argue with anybody to leave that final target to run tomorrow on the NASDAQ. There's plenty of space overhead if we can start to crack through some of these levels. The NASDAQ also has, like on the S&P, some big levels below that, especially that 12,307.5 level is that prior big high right there, right? So same basic idea here on the S&P. Now, let's talk about one more scenario, right? One more scenario. Whether or not we get the bear trap, right? Trapping in bears off this low. Now we really rip, right? I mean, we're talking this thing just rips and runs higher, okay? What's the problem now? The problem is we're way, way high up. We haven't seen many meaningful pullbacks. If it rips and runs higher, now we start thinking about, like we talked about earlier this week, finding those bigger channels, right? Find those bigger channels. So if we come out in Asia or tomorrow morning, right, and this thing just rips and tears this thing going higher, now we got to think, okay, I'm not going to buy way up here, right? It's too high. Again, it's too high to buy, right? I don't want to buy high. So in these situations, if it really rips and really races going higher, what I'll do is I'll go looking for larger channels, right? Larger channels, and we'll wait for those nice deep pullbacks, right? Think about using the prior highs as support, right? Wait for deep pullbacks and trap in those bears, right? Let those bears sort of get short, right? And buy right into those stop losses, right? Buy right into those stops. Okay, and again, on this example, again, the assumption is we're trapping in the bears off the low. Something shakes this market up. It rips, right? Really, remember, anytime we see a strong move in one direction, what do we expect? A pull back, trap in some bears, and retest the high. And again, I wouldn't blame you for leaving a little bit of that piece of the runner, right, on a Friday afternoon or late Friday morning. All right, guys. Now, the last question now is how do I short off the high? Okay, so there's definitely gonna be trend lines, right? There's a trend line right there. So can I short off the high? Because again, I think there's a good chance here we may see some bear traps, right, and get good entries going long. But again, we may not get that convincing break to that high here. So as we go higher, how would I short something like this? Well, first of all, think of the context. We're not an overall bear market. We're a bull market. Okay, so as we go higher, what do? We sell double top reversals. Okay, there are two ways to short the high. One is a crown reversal, right? Pop up, buyers try once, buyers try twice. We're basically roping in the buyers. Remember, at this point, it's all bullish, right? It's all bullish. Yeah, we definitely assume that there's some big money up there, but they may not have enough firepower. It's very bullish right now to drive this thing lower. So in order for us to sell off the high of a bull market, we need to get some sort of catalyst, right? We need something that gives us more of an edge. And that, of course, is a bull trap and running some stops, right? Stops will be hanging out below that low, and we can now sell into those stops. This is not my favorite trade for tomorrow. It's not. But this is one of the ways we can short this thing. Okay, so small size, maybe a quarter normal size, right, on a short like that. Okay, and again, if this was a bear market, I would say it's a great trade. The problem is when a market rotates off the low like this, it has a lot of momentum behind us. Okay, now may get it, may not. Not my favorite trade overall. Another trade that I think is a lot more realistic is a pullback, a retest, and a double top. Once they double top, now we know, right? Now we know the pros are buying here, right? They're taking their profit at the highs. Now the rookies come in 1, 2, and now we can be a lot more comfortable with that short off the high, right? Because again, we're anticipating as this thing rotates off the high in an overall bull market, we are anticipating that this pullback could blow right to that high, right? We're not a bear market. So once they hold that pullback and the buyers are in, now let's see how they react when they go back to retest the high. If we start seeing these buyers struggle, right? Now we know where their pain is. And remember, we need that pain. We need that stop run to give us the edge over the buyers here, right? Because we're all bullish in that scenario, all right? That can be a very lucrative trade. Because obviously, catch some buyers off guard, we're going to want to rotate all the way back down. Other side, that can be a pretty lucrative trade, right? But again, be patient and really wait for that chance to sell into those buyer stop losses because you need to get that as an edge. All right, guys? Boy, I'm getting excited just talking about this right now. Looking forward to tomorrow with you guys in the trade room. So NASDAQ's all prepped up. And again, everything I just talked about on the NASDAQ can also be applied to the S&P as well, right? S&P has to be convincingly break to that high. S&P is some levels overhead. And again, you'll see more context of these levels with those bigger 4-hour charts I put in the description of the YouTube video. All right, let's wrap things up with the... I will keep my jokes out of it here right now. I'll say it this way: the relatively confused crude oil right now. That is the safe way to say it. I know the YouTube gotta be careful what you put in video these days. Anyways, we are bearish on a 60-minute chart. If you look at a 60-minute or a 4-hour right now, it's really difficult to call this a bull market. It really is, right? Now, I've talked about this. I definitely think on a 60-minute right now, which again, I'll put the links in the description, I think there's going to be this potential this market may reverse. And if the buyers have anything to say with it, this is a very bullish clue. Why is this a bullish clue? Why is it a bullish clue? Well, because there's a range right here, right? And so we get a breakdown into a range, we break out, and now we're rotating, right? That's a lot of momentum. When you think about it, right? The buyers are pretty much taking control, and we talk a lot about the 21 moving average in our video classes. It's kind of how you know who has control over the market. So buyers have done a pretty good job at convincing us they've taken back control by holding and separating off the 21 EMA. This rotation off the low, right? Picking up off that channel. Remember I said earlier, rotation is very, very important. And right now, the buyers have a great chance to rotate this thing off the low. So we're definitely pretty again, we're relatively bearish on the 60-minute, but apparently nobody told the buyers that, right? Because again, you would think that strong move down, they would have retested that low by now, but they're definitely not. So my favorite trades on a situation like this are going to be bear traps and breakouts, right? Going higher, almost identical to what we just talked about in the NASDAQ. And then really, as we go lower, trapping in bears and buying back up into that trading range. Now, again, it is a bear market on the 60-minute and the 4-hour, and so we may get a breakdown, right? And so we definitely do have some options as we go lower, but not easy to want to sell this right here, right now, okay? So as we go higher, it's an overall bear market. Again, overall, kind of in air quotes right now, right? We're definitely on eggshells with the bear bias right now on oil, uncomfortably bearish, if you will. So as we go higher here, the way that you want to look to be a buyer on this as we're trying to rotate higher is to look for those traps, right? Look for those bear traps because there may easily be a channel coming down here, right? Trend line coming down here. And so you want to be buying as low as you can. That way you're already in the profit before the next round of bears comes in overhead, right? I would also watch for a 1 2, 3 breakout, right? 1, 2 convincing break, right? A convincingly strong pop, those highs. If I can get a 1, 2, 3 breakaway move, I can now mark off that high, mark off that low, and start looking for that first test off the low of that channel. Now, where would the buyers want to go? The buyers have a beautiful objective target up around that 78.35, 78.80. The next big block is around that 79.38. That's last week's close. So if the buyers really get on their horse tomorrow, which, again, debatable, 79.38 would really be where they'd want to go. Right now, though, this is definitely where we would think the buyers will have their first big pullback after a breakout. Another one would be, of course, the pop and grind, right? We pop up, we grind, we grind, we grind. We convincingly break and hold all those highs. And then, of course, we go out for a new channel and we're buying that first test right off the low of that channel. Could be a trap entry, could be a failure entry, right? All the same stuff you guys are learning in the free trading course. Now, as we go higher, it's very difficult to want to short this market right now. One, because of rotation and how much momentum is applied in rotation. But the next thing is hello, there's a huge trend line right there. So the only way you can really justify being a seller up here, and again, there may be some larger, channels, you know what I mean? There may be some larger channels there. So we may definitely see that. But as we go higher, the only real way to safely sell this, because of that stupid trend line right there, is to use a crown reversal. In other words, you've got to sell high. That way you're not selling into that trend line. And to do that, buyers come in, try it once. Buyers come in, try twice. Remember, buyers want to buy low. So as they go lower, they try once, lower price, try twice. We call this entry counting. You'll learn more about that in the intermediate classes on our website. We go into let's put it this way. They don't call me professor for nothing. We really geek out on entry timing, one try, two try, in our video course. And so that's where you're going to see those entries. Again, mostly because of momentum, right? One try, two try. The trap, of course, is because of that trend line. All right? So that's the only real safe way to sell this thing as we go higher here. Okay? As we go lower, it's pretty straightforward. The same game plan we talked about on the S&P. Right? We take out those lows, could be a pendulum swing, could be a triangle level right there, but in this general area, we take out the lows, the bears come in, and they foolishly sell into it, right? We trap in the bears because, of course, it's an overall bear market. We need their stops as fuel to give us that edge, right? I'm not a big fan of simply buying low or selling high. I want to wait and see because, again, we are, a little bit more bearish than bullish right now. So rather than simply buying that low, let's see what those bears who have control of this market, let's see what they do with it. Right? They may blast this thing and keep going lower because, again, we're overall bearish. But if they do struggle a couple times, now we can go for that stop run back into the range. And again, it may run lower, it may retest, and then 1, 2, back up, right? 1, 2, up, find that new channel. Again, this is literally word for word for the game plan on the S&P, right? And the Nasdaq, I might add, right? We went over it, though, on the S&P. Right? Strong move down, let them retest, trap in those bears as they get short, right? Horrible place to sell. You're at support with a range above you. Horrible place to be a seller. I don't care how bearish we are, right? Horrible spot to be a seller. Failure, and then grab that first test for that potential rotation back up to retest the other side of that trading range. A grinder, right? A grinder. Pop down, V bottom, we grind back up, mark the high, mark the low. You got this, right? This is all the same stuff we just talked about, right? Off of that low, right? We V bottom, we pop up, and we grind. Trend line, buy that first, right? See it? These are pretty common, right? Off these little bounce off those ranges. Now, as we go lower, they have to take out that low. Okay? Take the low out, hold the pullback, and what? Blast. We have to see a convincingly strong break through that low. Now, what I always tell my students is to make sure that moving average clearly comes below that low, right? That way, when I do get that pullback, what I'm basically doing is I'm able to use that prior low, right, as the key entry area, right? So you want to think about on that breakdown, again, I want to get low enough to that low So I can now start thinking about using that prior swing low as an area to hold it. Okay, one of the easy giveaways is you get like that move like that, 1, 2, 3, right? The channel's right here, and you're like, okay, but you're right into that low. You know what I mean? That's an easy way to think about it, right? So again, take out that low, pull back, and really show me some convincing move going lower. This seems very realistic for tomorrow. This definitely does seem very realistic because, again, of the long-term bear bias, and you will see we get some big levels down there. 72, 71 is the next big objective. You'll see that on the 4-hour inscription. All right, guys? Boy, oh boy, busy. What a week. What a last 2 weeks. Like I said earlier, I almost wish we had one more big week of earnings, right? They're kind of a pain in the butt. You got to be careful around the edges. But man, oh man, I'll tell you, if next week is half as good as the last 2 weeks have been, we'll be very happy in our trade room. All right, guys, wrapping things up. You've heard enough out of me here tonight. We had a game plan is ready for tomorrow. Don't forget, I would always recommend grab that free course link, the description of the YouTube video. That'll get you going in the right direction with your trading. If you have any questions or if you need any help along the way, don't be afraid to call the office or use live chat. Drop me a question if you got them in the comment section below. But the easiest way to get into anything we're talking about today is to call the office, send us an email, or jump on live chat. And boy, oh boy, great job this week. Now remember, discipline, patient tomorrow, right? I don't care how much money you've made this week. We're only as good as our next trading day. So every day in my eyes starts back at zero. So tomorrow, don't force those bad trades. We're going to leave those runners on Fridays. And keep in touch. I'd love to know how you do on your own account. All right, guys. I will see you tomorrow morning at the opening bell. If not, we'll come back next week and we'll do it again. Starting off on Monday afternoon with the next edition of our newsletter. As always, my name is Joseph. Thank you so much for being here tonight. Be well. Be nice to each other. Enjoy your weekend. If I don't see you guys tomorrow morning, and you better be here next time. Adios, amigos. Bye-bye for now.